Yuki Yusui, who's the Managing Director of the Glasgow Finance. I always lose track.
Glasgow Financial Alliance for Net Zero.
Do you know, I've been saying GFANS ever since Glasgow, and I still don't get it right every time. Just too many letters in it, but it's a very cool initiative of $130 trillion of assets under management backing it. So this is the elephant on the globe. Thank you for joining us. I'm going to hand over to you to introduce your panel.
Okay, thank you very much, and good afternoon, everyone. Thanks very much for those online as well. Very nice to see you. I'd like to ask the panelists to join me on stage. So, Ms. Gillian Tan, Assistant Managing Director of the Monetary Authority of Singapore, Ms. Ritu Aurora, CEO, CIO, and Asia Alliance Investment Management, Singapore. And online, Mr. Calvin Quek, Senior Environmental Specialist, Asia Infrastructure Investment Bank. And lastly, but not least, Ms. Nikki Kempt, Director, Asia Pacific Nature and Climate Finance, World Economic Forum. It's not in. Is there an order?
We just have some fun. But okay.
Okay. Wow. So we have a female lineup today. Calvin is our online. Would you be able to show him as well? Okay. So yeah, thanks very much for Sean and Harry for setting this up. It's really, I think, they've kind of cut our work. They've introduced everything and the challenges and even got to the solutions, which is great. So this session is about going beyond green. Is Asia ready for the transition? So Sean was talking about this $9.2 trillion a year by 2050, annual investment by 2050 that has to happen, and that this is actually a great opportunity. So we do want to focus on the opportunity side and whether Asia is ready for that. So first of all, I just want to acknowledge that there are a lot of stakeholders who are in their own way responsible for making this happen. And today's panel is a small kind of snippet of that stakeholder, a small ecosystem that we've created together. So maybe as an introductory remark, if you could just tell how you sit within that, big ambition of financing the transition. What is your role in that ecosystem? So starting from Gillian, please.
Okay, thanks very much, Yuki, and huge thanks to Sean and CBI and all the sponsors for having me here. Can I just check, how many of you were at the MES Blended Finance conference this week? Oh, thank you. That really warms my heart. That's super. Okay, great. So anyway, as you've heard, my name is Gillian. I'm the Assistant Managing Director of Development and International at MES. And, my main role is really to develop Singapore's financial center, which means many of you will corner me at tea break and ask about many other asset classes and things. But clearly, sustainable finance plays an important role there. As I was thinking about what role the MES and other regulators should play, it struck me that it's kind of sad that we even need a central authority to come in. In an ideal world, all the incentives and, I guess kind of interests would be aligned such that, everyone would just organically move towards net zero, right? And Sean explained to us how urgent it is, how existential it is. So you shouldn't need the MAS or anyone else to tell you what to do. But unfortunately, I think climate change is not one of those issues where everything is beautifully aligned. The reality is that we are a deeply fossil-fueled civilization, right? And decades, indeed centuries of growth has been premised on the use of fossil fuels, on the use of coal. And now we find ourselves in this problem. And really what we need to disrupt that growth story while continuing to prosper and do well is a great deal of economic restructuring. That's pretty fundamental. We're going to need technological advancements, and we're going to need a heck of a lot of financing, right? And I think that because you have these three very difficult pieces, combined with a really tight time frame, right? We need to actually get things done by 2030 and then 2050. There are going to be limitations to a market-driven effort. So even though, you know, Yuki, GFANZ, and so many others have done great work, CBI as well, the reality is we cannot just leave it to the market. And I think that's where regulators have to step in. So I do feel that regulators and central banks can play a role in galvanizing the whole system to work better together as a system. A few specifics. First, I think we play a role in defining the specific challenges that we all need to be alive to. I'll give you an example. I think when we first started, in Singapore at least, gaining attention to this issue, we were very focused on green, right? So we had a green finance action plan. You know, Harry talked about some of our grant schemes. They were very green focused for a while. But what we've realized is that green is actually not the issue. Green sectors make up less than, I think, 8% of our economy. So what's really needed is a focus on transition. It's much more difficult, but we do need to refocus attention there. The other area which I think central banks and regulators like the MAS can contribute to is drawing attention to other key themes, which actually Sean helped me out already this afternoon. So, you know, I think there's a lot of focus in the market on mitigation and financing mitigation, but how about adaptation? How about resilience, right? Especially for Singapore and this region where that's critical. So, you know, calling attention to that. And finally, the other area is blended finance. Did you guys catch how many times the term blended finance was used in that short half an hour earlier? Thanks very much, Harry and Sean. It was quite a fair bit, right? And that really was the MAS saying, this is a critical structuring mechanism. We need to do more. How do we call attention to what could be a very technical term, a financing term? Let's call a conference and, you know, let's get 600 people in the room together. And that's raised awareness in a way that is critical. So that's one. I think the other thing that regulators can do is really ensuring a strong pipeline of bankable projects. So, you know, what we hear from folks in the audience and folks like you all the time is that there's no shortage of finance. What you lack is you know, strong, de-risked bankable projects, right? And I do feel that central banks and regulators can step forward, as we have done, working with other government players, of course, to enhance project bankability, right? Whether it's through project preparation, feasibility studies, and so on. The final area where I think policy and regulation and regulators can play a role is as your supervisors. Now this is going to get attention, right? Because everyone worries about this part of our role. And I think, you know, as supervisors, we can be very clear, first and foremost, that if you've got transition or brown sectors or assets on your books, it's not about just an immediate exit, right? Tempting as that might be, but rather that the financial sector, all of you in this room, have a role to play in ensuring an orderly transition, right? Working with your clients to point them towards sectoral pathways that are aligned to 1.5 degrees and getting them the financing and the know-how they need to get there. So that's really critical as well. And finally, just one area which didn't come up this whole week in all the discussions that we've been having, and that's talent. So I think financial sector regulators and central banks like myself, right, we can do more to ensure that our players here have the sustainable finance or sustainability talent they need to grow in this area. I'm part of a group that is working on a jobs transformation map for sustainable finance. And what we're actually doing is studying in a very quantitative way the impact of sustainable finance trends on jobs and, in terms of new roles, and also the skills that will be required. And we're looking at that at a 3, 5, and 10-year horizon. We hope to have the results of this sometime next year and to share that with everyone. We also had DPM Wong recently announce a $400 million program, the Talent and Leaders in Finance program. And part of that $400 million grant money will go towards funding grants to develop specialist talent in Singapore. And one key area of specialist talent required is sustainable finance. So hang in there, help is on the way. We'll make sure that you have the talent, the attention, and the supervisory support you require to get this done. Thank you.
Thank you, Gillian. I think the first point you raised a lot of points, so I won't be able to summarize everything, but just 2 points to pick. So I think the role of central banks, getting the market to focus on the challenges. I think that was a crucial role that TCFD, which led to the development of the TCFD that my boss Mark Carney at the time was the governor of the Bank of England, raised that climate change is a risk to the financial system globally. And I think those kind of roles is something very unique that the central banks play. And on talent, I think that's something that Singapore really has an edge on this. I think all the ministries, not just MAS, but all the ministries are excellent at doing that. So I think that's a good role model that other financial regulators should think about, because I don't think that's the first thing that they would think about normally. Yeah. Then we have Calvin online, so welcome. Yeah, nice to see you, and thanks very much for joining. Maybe just so that you're not there alone, would you like to introduce yourself and talk about how your role AIIB plays in the financing of net zero transition?
Thank you, Yuki, and thank you, Sean and the team for inviting me. So it's a pleasure to see you all to take part in this conference. I'm an environmental specialist at the Asia Infrastructure Investment Bank, which is, as many of you may well know, an institution that was founded 5 or 6 years ago, very soon after the Paris Accord, which is probably the most significant global treaty that the world has to address the climate crisis. I've been here for the last 4 years, and prior to this, I had spent some time in NGOs and also spent some time working in the financial sector. And just to start off with a bit of a hat tilt or nod towards Gillian and Singapore. I am from Singapore, but I've lived in Beijing for a long time now. But when I left Singapore 12 years ago, there was really not that much going on in sustainable finance and green finance, and it's amazing to see the great progress that Singapore and MAS and the authorities there have done to push this to the forefront of the agenda. At the AIIB, an institution that's focused on funding infrastructure, sustainable infrastructure is actually key towards ensuring sustainable economic and development goals for our members. We have a target of ensuring that portfolio, 50% of it is allocated towards climate adaptation or climate finance, mitigation and adaptation by 2025, and we will be Paris aligned next year, according to an overall joint methodology that is being coordinated with the other MDB partners. I think one of the challenges, I think, with respect to green finance is that I often reflect about, and Sean talked about the great numbers that will be needed to address the climate crisis. is the ongoing sense that we are behind the curve. One of the things that I keep in mind is that the Earth has actually warmed 1 degree on average since the late 19th century. And that sounds like a very small number. But the threat of a 10-year storm is 3 times higher compared to levels at which global warming was not there. And the threat for a 50-year storm is 5 times higher. So the news that we see regarding frequent events and so forth, those things are par for the course now. And so the challenge is not just obviously moving towards a net zero future, but also ensuring resilience as well. And adaptation, as we have, as I'm sure we have discussed and will be discussing, is difficult to finance because it requires a very specific context approach towards identifying the source or the particular areas in which we want to try and protect from the devastating effects of climate change. Anyways, I can go on and on. I just wanted to just share a few initial thoughts regarding the challenge for climate finance and the like, and the fact that we need to do more on adaptation. Thank you very much.
Yeah, thank you. Yeah, I think when we talk about net zero transition, there's a lot of focus on the mitigation side, but as Sean was saying earlier, and as you were saying, I think the adaptation and how the mitigation agenda crosses over to nature and other like blue economy and other sustainability issues is going to be more important. And in the end, everything will come in a grand circle, that it has to be sustainable development. Yeah, thank you. Then let me go over to Ritu. Yeah.
Thank you. Maybe thanks for the opportunity, and maybe I just take a moment to introduce Allianz. Allianz is a founding member of United Nations Net Zero Asset Owners Alliance, and we were very actively participating even earlier this week. Our commitment goes very deep, not just on the business side, but also on the investment side to net zero. And we've been taking commitments and delivering on it, and we have a pathway ahead, which each one of us understands.
Would you like to talk a little bit about how you think investment managers play a role in the financing and the mobilization of financing of net zero?
Sure. I think investment managers or asset owners, as we like to call ourselves, play a very significant role, more so when it comes to insurance companies like ourselves or pension funds, because we have a very long-dated horizon. We invest for long periods of time, and hence from an asset liability matching point of view, the transition is something we can very comfortably finance, while some other investors who have 3 to 5 year horizon would struggle to. So hence there's a very natural fit. Also, we carry fiduciary responsibility, and many a times our policyholders are also quite keen that we have investments which make the world a better place. And now more and more what we see is a pull from the market and from the customers towards making investments that support this kind of transition to green energy. The other aspect why it fits in very well is very deep pockets. Insurance money is fairly sticky. Over time, it builds a big estate, and hence we do have the balance sheet size and scale to support these kind of initiatives. Having said that, we do face a few challenges, and I've been in various conferences discussing them. The challenges that we face, and we face that as a group of investors, even at UN Net Zero, we are a large group of investors, and we believe coming together gives us the force and scale to make a change. One challenge, and where maybe I can request help from Gillian also, and I know efforts are already underway in Asia, is taxonomy. Different jurisdictions are developing different taxonomies, not completely aligned at different points of time. And you can see even from a simple example like Allianz, it can get very complex because I'm an insurance company from Germany, keen to invest in Asia, but if the taxonomies are not aligned, it becomes a big roadblock for investment. And this is still a developing space. We are contributing, we are participating, but I think as regulators and governments, that's a big space that will help channelize more institutional money. The second aspect would be benchmarks. We need more and more benchmarks which demonstrate the climate and the transition aspect because as investment people, we need our performance to be benchmarked. At this point of time, we struggle to find the appropriate benchmarks to reflect that. And that is another space which is under development. I think talent, which you talked about, is so important. I think, and that goes across the spectrum. And lastly, I think is disclosures. Wherein at this point in time, and when I say disclosures, it's not just the corporates or the companies that are raising finance, it's also the disclosures and transparency on data that we would request from MDBs with whom we are trying to partner on blended finance. So the speed and transparency of disclosures will really add momentum to what institutional investors are keen to do. It's aligned to do. And like you said, it is a pull, right? It should not be a regulator or government pushing. These are few things that we're trying to overcome, which I agree with you. There's immense capital waiting there to find its way to these kind of investments. And these are some of the roadblocks we need to clear as we progress on this journey.
Thank you, Ritu. That was very nice. Just a question. So when you say taxonomy, does Allianz in Singapore follow the EU taxonomy? And does it also...
It depends on which balance sheet. So Allianz invests out of 70 countries. We have presence in 70 countries. So it will depend. If I'm investing out of my German balance sheet, then definitely because it's governed by German laws, I have to follow German taxonomy. But if I was doing it out of, say, my Singapore or Malaysian balance sheet, then I would follow. So as a global company, we have to balance both ends.
I see. Is there a global strategy around that, or there are more kind of independence in the different alliances?
See, taxonomy is a government space. So EU is far progressed, and EU has come together to develop how they will interpret green. They've gone very detailed in how they will treat each part of the sectors and investments. Asia is developing. There's an ASEAN body which has come together. It has participations from all the governments, large governments and regulators. It's under development. But it is another thing to expect that all the countries in Asia will adopt the same methodology. If we don't, we have a big problem on hand. We realize that, but then it's also simpler said than done. Yeah. Because if Malaysia treats the same investment differently from Singapore and then differently from Thailand, you can imagine the complexity it will create for investors like us.
Yeah.
Maybe I can come in here. Yeah, no, just to keep it lively and interesting. Sorry, Nikki. Just come in. No, I mean, Ritu makes excellent points, right? And I think what Ritu just summarized is what many global financial institutions are facing every day, right? So they're having to grapple with the EU taxonomy. They're keeping up to date, hopefully, with the green finance industry taxonomy, which Sean, by the way, is industry-led, not MAS. But thank you for the shout out. Yeah, and we're mindful of that. So I think we can try to manage it in a few ways. The first is that insofar as the GFIT, the industry-led taxonomy, is concerned, it's really important that it can be mapped and is interoperable with the EU taxonomy. So that's the first point. And I think it will be. We've been very careful, working together with industry to ensure that they use a methodology, the metrics and thresholds and so on, that will allow that interoperability. Now, ASEAN, Ritu's absolutely right to point that out, because that's a little bit more complex, right? Because now you've got another regional bloc, Singapore, ASEAN, and the EU, and how's that going to work? The reality is ASEAN, as I think Ritu acknowledged, is a far more complex place, right? We've got many countries at different stages of development. Even putting aside stages of development, the stages of data readiness and collection vary greatly as well. But even then, I think a real effort has been made to ensure that the top tier, the most advanced tier of the ASEAN taxonomy, which is called the Plus standards, that is 1.5 degree aligned, which is in keeping with international standards, and that it will be fully interoperable with both the GFIT taxonomy as well as the EU taxonomy. So I think these are things that policymakers, governments are well aware of, and the devil will be in the details, but at least the intention is clear, and I think we're heading in the right path.
Thanks very much for that extra information. Yeah. So now let me turn to the real economy sector representative in this panel. Ms. Nikki, would you like to explain about your work and about how the real economy plays the role, how WEF looks at what you play as a voluntary initiative in your space with your members? Thank you.
Thank you very much. And Sean, thanks very much for having me here. The forum does try to be very real, so I hope the real economy is is what we're delivering on. I'm based here in Singapore for the World Economic Forum, and my work here has been very much regionally focused and working in the areas of what can we do specifically targeted around sustainable finance and investment for climate and now more recently also nature. And that actually spans quite a few segments because we don't see these topics or pillars, if you like, as separate, and we see it as a system. And so within those sort of topics, there are systems that relate to food, water, oceans, circular economy, what's happening with biodiversity in the region, and so on. So it's targeted but not linear. So one of the things that I wanted to really raise here was that I think, and this is something I think Sean has touched on as well, is we have a lot of technology, and this region's fantastic for this, right? There's amazing innovations that are coming out of this region, and Singapore's hosting a lot of that through a lot of its initiatives here. And we see that through a number of the decarbonisation initiatives and across the energy sector, but also across industry. We've also got an understanding of what we're facing, and the science is telling us a very clear story. So we've got that. There's also a lot of capital in the system. What we need is the pathways and the mechanisms to get that together, the cooperation to get that together. And this is where we try to work in the real economy to bring that together. So the forum's really an enabler to cooperation and aligning of interests and defining those pathways and mechanisms. One of them, I want to, it's a lovely segue actually into what Rita was saying, because we're working closely with, at the moment, one of the initiatives that we're doing here is working closely with the Net Zero Asset Owners Alliance and a third partner, which is the EU ASEAN Business Council, on an initiative that looks specifically at the financing mechanisms for emerging markets on transition investment. So acknowledging that green is now, and thanks to Sean and many other people that sort of run behind him's push on green bonds is now $1 trillion investment initiative in the world. So we know what green bonds are, we know what green investment is, and unfortunately what's happening is because of the push to net zero, the race to net zero, we are running very fast at green. But particularly in emerging markets, which are deeply embedded in the supply chains globally, we need to look at what investment is needed for transition. And that's not easy, it's not clear. Financial systems don't operate well where there's uncertainty of cash flow and uncertainty of future. So how do we define something that is really has a lot more clarity? And we agree standards about what transition looks like so that we try and avoid transition washing. And so this particular project that we've been working with your colleagues on, fantastic input, has recently produced a paper which I would recommend to you. We've called it bit provocative, but we've called it Code Red because we do think we're in a phase of Code Red, and it's a call to action on emerging markets transition investment. And what it does is it breaks down from a series of expert dialogues, recommendations that say, what will it take to create a high-functioning, liquid, effective transition investment market. Now, it's high level, it's first cut, but it's really quite targeted. There's 4 themes, and I'm going to run through them very quickly if I may. Have I got time, Yuki? Yeah, okay. So the first is to expand institutional investor awareness of the opportunity and the urgency of the need. What does that mean? We touched on taxonomy. That's a big part of it. How can taxonomies play a role in facilitating and creating clarity? But that's not all. One of the interesting parts of all of this is financial metrics and how we measure success in decarbonising. And Rita will understand what I'm about to say, and I hope many of you do as well. But the weighted average carbon intensity scores is a great example of where our financial metrics skew behaviour towards something that perhaps we didn't want. And this is where the carbon intensity of a whole of company is captured if there is, for example, a green bond issued by that company, but it's carbon intensive, it's high carbon intensive overall. So in other words, you just don't get that benefit of investing in a green or a transition or where the company is trying to use those proceeds in order to become more green. So these sorts of things really need attention, and we need to make sure that we're not having these adverse consequences of these metrics. The third point around this theme is a contentious one. It's been put to a number of regulators, and that is differentiated capital treatment. Now, the focus here is the financial impact of climate. We're not saying that all climate investment should be necessarily differentiated from capital, but where there's financial impact and risk impact, then it's no different to to credit risk or operational risk as is currently counted in capital metrics. So how can we build something that really hones in on that and provides an incentive? The second theme, increased supply of green transition investment. What do we mean? Supply is those who are issuing. Why aren't they issuing? Why isn't there enough issuance in this region? Well, if to start with we said every public company and every listed entity had to report Scope 1 and 2 emissions, all of a sudden we would have transparency and an impetus for issuance. And that would be a big positive for motivation, if you like, for supply. The other is subsidies and incentives, and it's fantastic what the MAS has done around this, really trying to reduce or draw down the friction costs in issuance. So if we could see more of that, I think that would be helpful. The third theme is centred around something that we've also touched on, which is blended finance, but it's specifically around the role of one of the key actors in blended finance, which is the multilateral development banks and DFIs. And the call on this one is for them to modernise. And they were set up in the Bretton Woods era around trying to stabilise exchange rates and the global economy. And we've moved on. Our risk now is climate, not destabilize. Well, it's probably destabilized currency is still there, but we've figured out how to do that. So we've moved on. So we really need to see the whole multilateral system moving on with that. What does that mean? Share data. Multilaterals have been working in the emerging markets for decades. Their database on what risk really looks like in emerging markets as opposed to perceived risk is deep. And that data really needs to be shared with the private sector in order for that to, for the private sector to get comfortable with some of those risks, or at least be able to quantify them in a more effective way, rather than guessing what political or currency risk might be there. The second is to move to what many of you who from the private sector will know, and has been around as a mantra in private sector, to churn balance sheets through originate, bundle and distribute models. So this allows that recycling of the balance sheet constantly and impact. The third one is looking at how blended finance can operate at a national level, aligned with the NDCs or national decarbonisation plans, and how can that be a way to scale blended finance and bring blended finance into a more sort of accessible realm for many financial institutions. And finally, of course, their traditional role for MDDs and the multilateral sector is to de-risk. The final theme I just want to touch on very quickly is national enabling. And when we talk about this, we're talking about decarbonisation pathways. We need to see those. They need to be really clear and robust and built out in detail. They need to be aligned with carbon pricing. If we don't have carbon pricing that is effective, it may as well not be there, right? And the final one is the mainstreaming sustainable finance into regulation and the markets, so that it's not a new shiny toy. It's now part of the central mainstream finance sector. So that I commend the report to you, and if you want to get in touch with me, I can put you onto the link where it is housed. We have seen a lot of people leaning in to give us feedback and also to say, how can I be a part of making these actions happen? And the final point I want to make is one that's been touched on a number of times, is we've also had people say, but what about the just element, the social element? You haven't touched on that here. What about the nexus with climate and nature, between climate and nature? We haven't touched on that here. So these are other areas that we of course need to address.
Right. Thank you, Nikki. So is that currently a consultation process going on right now, and that you have a consultation version, or you've finished the report?
So the paper is now completed. So the consultation was done under Chatham House and very discreetly, because we felt that there were a lot of things that people wanted to say, but were a bit anxious perhaps about saying them very publicly. So so that process has happened. But it's just the very first discussion paper. So we will be working on this at least during the course of the coming year, and there will be a deep dive and build out of a number of these themes.
Okay, great. So I think what Nikki has touched upon, there's two, I think, important things. One is about going beyond green, which is actually the title of this session. And the other one is about emerging markets. So this is the second half of the session title, which is Asia ready for the transition? So you kind of touched upon both. Just on the green, so there's a lot of, the name transition is a little bit confusing, because sometimes you're talking about the transition of the whole economy towards net zero, and then you could be talking about a specific financing strategy supporting, say, high-emitting sectors to push along their phase out of high-emitting sectors, or it could be about them going on to the 1.5-degree roadmap as well. So it's a little bit confusing, and just to kind of advertise on the GFANS product here as a moderator. So the Glasgow Financial Alliance for Net Zero is putting out a new guidance on what does an FI transition plan look like. And here we've identified 4 transition strategies. The first one is financing the green solutions. So that's the green that we were talking about earlier. And then the next one is financing the companies that are already aligned to 1.5 degrees. The next 2 are the bits that I think is very critical, especially in Asia, and that is the supporting the companies that are not currently aligned to 1.5 degrees, but helping them to get onto that pathway as soon as possible. And the last one is the managed phase out, or the early retirement of brown assets that are going to be stranded if they are left on its own. So those are the 4 different strategies that have been identified in that plan. And I guess we would like to talk about a little bit more about this financing of the hard to abate sectors next. And then hopefully, if we have time, we'd like to go on to talk about the emerging markets as well, and about the financing, the blended financing as well. Although that's being covered a lot already in the MAS conference. So just turning on to the financing of the hard to abate sectors. So now starting the new round. Gillian, how can the financial sector best work with this sector?
Yeah. No, thanks, Yuki. I'll go quick because I think we're running short of time. But just to say that these sectors are really quite critical, because the hard-to-abate sectors are actually key constituents of the Asia economy and even Singapore's economy to a certain extent, right? So things like power, industry, chemicals, even agriculture, construction, right? These are pretty hard to abate. I think when I think of this, I'll think of it in terms of maybe 2 T's and 1 S. So the first T is transition, which I think we covered in some length already. Basically, it was important to us from day one, working with industry, that the taxonomies we developed had a transition category or color code, right? And it's sort of both, right? It's those who are sort of on a Paris-aligned pathway, or don't have a clear pathway now, but are expected to develop one over time. So what is that category that allows for financing to continue to be directed to transition? So it was very critical that the taxo provide for that. The second T is transition plans, and it's great to hear about GFAN's work, right? Providing some guidance on transition plans, because frankly, when I speak with some of our FI friends, there is still some confusion around this, and I think it is a developing area that we will need to watch carefully and work on together. I think it's important, right? So FIs need their own transition plans, but they can also work with their clients on the client's transition plans, and that will help the real economy, right, which Nikki highlighted earlier. And what the FIs can do, I think, is obviously raise awareness of these sectoral pathways that Nikki talked about, because those are critical, and actually awareness levels are pretty low right now. So FIs can raise awareness of this among their clients. And financial institutions, the very best ones, and I've seen it a lot actually, they can actually go to clients because they know these clients very well, and actually suggest to them decarbonization strategies, long-term plans, and the clients do take on board these sort of advisory inputs. That said, I think if you're an FI sitting in the audience, please, there's no need to feel pressured to do it all at once, because I think it is a new area, right? And what was very interesting, I hope all of you have seen DBS's recent report, where they laid out their targets for their bringing down their Scope 3 financed emissions. It's definitely worth a read. I see some of you getting on your phones to look for it. Please do. I fully recommend it. It's a very, very interesting piece of work. And what they did was, they've set these targets for, I think, something like 7 sectors. And for 2 of the sectors, I think it was agribusiness and chemicals, DBS actually took a look at their clients and said, hey, wait a minute here, we don't even have enough data, right? There isn't even enough reporting data out there to set a realistic reduction target. So instead of putting out willy-nilly a target, what we'll do is we will set data reporting targets for these two sectors. So they will actually, work with their clients to, and these are big clients, right, in these sectors, work with their clients to start reporting off these targets. And in a couple of years, we'll be in a better position to actually set reduction targets. And I thought that was really critical, because the reality is that for sectors, right, and I think, either Sean or Harry said this earlier, the picture won't be the same for everyone. It won't be the same for every entity, and it certainly won't be the same for every sector. And it's wonderful to start seeing our banks and FIs step up, realize that, and tailor their approach to these differences. The final point I want to make on this is S, and that's on solutions. So again, right, the Code Red report, I'm going to read it right after this. Solutions are important, right, because the reality is we need financing for these technological advancements that I spoke about at the start. Now, a lot of these new technologies are super new. They're super risky. In a traditional world, a lot of the FIs would be like, I'm not going to go near this thing, right? But the reality is we need investment in these technological solutions, proof of concepts, if we're going to have a hope and a prayer of decarbonizing in time. And I personally would really like to see a greater variety of financial institutions step forth. A lot of attention on banks all the time, right? But actually for some of these spaces, including the early stage financing, perhaps it's the PE VC players, perhaps it's the asset owners, the insurers coming in to provide cover for risk. All these players need to come to the table and contribute. And I'm really hopeful that we as MES can come and try and bring everyone together.
Thank you, Gillian. Yeah, so 2 T's and an S. Transition, and then transition planning. Oh, taxonomy is there as well? Okay. And
taxonomy, transition plan, solutions.
Okay.
Yeah.
Taxonomy. Okay, great. Thank you. So maybe Nikki, would you like to kind of respond to Gillian about some of the financing pathways that you are using in the hard to abate sectors? Oh, sorry. This is for Ritu. Yeah. Sorry. Apologies.
Sure. Engagement, I think, is a key part of what we are doing, and sharing and bringing together experts from different parts. So having a footprint over 70 countries, it helps us connect these sectors across the globe sometimes, and to bring about best practice sharing. We haven't done such much successfully in Asia yet, but in Europe we have managed to do that. Sharing, the transition is a simple word, but actually this technology transition for these sectors is fairly complex, and I think everyone is still finding their way. It's a complex road each sector and each company is on. So I think that part is something that we can play a role, but I don't think it will really be a key role for financial institutions to play. We can be a catalyst. We can finance this, but we can be a partner in the journey. But I think a key part of this will come from the governments, industry bodies, regulators.
Okay. Mindful of time, let's move on to the other aspect that Nikki was raising, which is about emerging markets. So moving, Calvin, sorry, we're not leaving you on screen, but Calvin, maybe you can kick us off on this discussion about how do you see the mobilization of finance into emerging markets and developing economies? Because this is where we are, I think, at a big critical issue right now. There's a lot of data now that says that during COVID, a lot of the financing, sustainable finance, has gone towards the developed markets, but the financing, both for the public and private financing, has really dropped in the emerging markets. And they're the ones that really need the most financing, new financing, for net zero transition. So what is the things that you are doing at AIIB?
Thank you. I'll try and make my comments short so we have a nice closure as well. AIIB as a MDB is necessarily counter-cyclical. We tend to move in where more commercially minded financial institutions would actually exit With respect to the COVID crisis, the bank actually launched a COVID response facility to respond to the crisis, to provide not just the financing for, say, vaccines and the necessary health equipment and so forth, but also to provide liquidity support as well to many of our members. Because AIB is an infrastructure-focused bank, we're also seeing that a lot of the infrastructure that's focused, that is green and sustainable, cannot be funded necessarily by government budgets or NDBs. So a lot of our work is actually also involved in trying to crowd in private sector investment as well. That is one of our metrics when we actually look at our investments in private sector projects. The ability for us to crowd in other players and also to ensure that we're actually not crowding out investors as well, which is sometimes a bit of a tricky, quite tricky that it's not easily achieved. I just want to make a quick connection with what I just said also to, I think, the comments being made about hard to abate sectors. I think one other area that could be explored and something that MDBs are perhaps not in the best position to make happen is the role of innovation in terms of finding solutions for hard to abate sectors. One of the pleasures of being the only one dialing in to the CBI conference is that I can Google some topics which interest me. And I noticed that the Australian government has actually provided a new grant facility to actually, it's nice small grants which are going to incentivize very innovative entrepreneurs and university professors to work on hard to abate sectors as well, because it's not just a technology issue, it's also an innovation issue. And I think the other aspect that we also perhaps sometimes fail to acknowledge as well is that hard to abate sectors are not necessarily difficult to abate technologically, but they're hard to abate because they're not, they come against socially constraints as well, whereby particular sectors employ a certain number of people, so it's actually quite politically hard to get to scale up these sectors as well. And I think that's where the role of, say, NGOs and universities and research institutions can come into play. So anyways, a couple of quick thoughts as we move into the last minutes of our time here.
Yeah. Thank you for that excellent timekeeping. Yeah, so thank you very much. Does anyone want to add anything on the and respond to Kelvin before we start closing up?
Can I just make a quick comment on the hard to abate sectors, if I might? There's a really interesting program that the World Economic Forum's been running since 2020 called Mission Possible Partnerships. I think somebody was a Mission Impossible fan. Anyway, this has since, and in fact very recently, now been a technical collaboration with the SBTI, which is really important. It addresses, from an industry perspective, 4 sectors: steel, aluminium, cement and chemicals. And from the transport sector, aviation, shipping and trucking. Within this initiative, and all those sectors collectively represent about 30% of GHG emissions. So this is an important, reduction, targeted reduction program pathway. Within the initiative, there is a financing pillar, and it looks specifically, and it's linked to the financing, the Net Zero Transition Initiative. And this has some very deep expertise and work being done by the industries themselves, alongside some fairly significant think tanks around sector financing plans, the de-risking blueprints, and transition financing mechanisms. And the aim is for near-term capital to be deployed so that we have action on these. And it goes down to as far as how many electric vehicles will be needed how many ships will need to be decarbonised, how many. So it's very, very specific when it gets into some of the work here. So this is being done. It's a very optimistic way of looking at it, I think, because these pathways, when we talk about them, we don't just sort of talk about them as something we wish would happen. They actually are happening, and they're available publicly. So we should be excited about this, and they will, because of their supply chain and value chain integration into this region. We will see a lot of that being cascaded here.
Yeah, thank you. That's a really nice way of rounding up this session, because I think what we saw through our speakers is that there are a lot of different actors here, and they are each doing a lot inside what their remit is currently, and that remit is also evolving as well. So what MAS or an investment is doing today might not be the same 10 years on. Definitely we didn't see central banks doing these kind of things 10 years ago, as it was pointed out earlier by other speakers. And so it's an evolving agenda, and the roles are evolving. There are more and more players coming into the market, and this is why talent development is so important as well. And we have the whole economy to transform within the next 10 years for 2030, and then by 2050. So a lot to do, but everyone, all hands are on deck. And we hope that this has inspired you about the opportunities and that the challenges are being discussed and thought about with many people. And hopefully you are invited to join if you are not already. Thank you very much.